Let's get one thing straight right now. You do not need to be a millionaire to make money from real estate. I know what you are thinking. You see the big office buildings downtown, the sprawling shopping malls, the fancy apartment complexes, and you think that world is out of your reach. You believe you need a massive down payment, perfect credit, and the time to manage tenants and toilets. That is simply not true anymore, and it is time for you to understand why. The key to unlocking this world is something called a REIT, which stands for Real Estate Investment Trust. You must learn about these because they can be a powerful tool to help you build the financial future you want and deserve. A REIT is a company, plain and simple, but it is a special kind of company. Its main business is to own and often operate income-producing real estate. Think of it like a giant portfolio of properties. Instead of just one person owning a rental house, a REIT might own hundreds of apartment buildings, dozens of office towers, or a string of warehouses all across the country. And here is the beautiful part. You can buy a piece of that company, just like you would buy a share of stock in Apple or Google. By buying a share, you become a part owner of all those properties, and you are entitled to a piece of the profits they generate. So what is the big deal? Why should you care about this? You should care because for far too long, the wealth generated by large-scale real estate has been kept in the hands of the already wealthy. REITs change that game entirely. They democratize real estate investing. They give someone with just a few $100s the exact same opportunity to profit from a portfolio of high-quality properties as someone with millions. It is about access. It is about leveling the playing field. This is your chance to stop just paying rent and start collecting it, even if you never meet a single tenant. The concept is powerful because of its simplicity. Imagine you and a group of friends pooling your money to buy a rental property that none of you could afford on your own. You would all share in the rental income and the responsibilities. A REIT is just a much larger. Now you need to understand how these companies actually make you money. It is not magic, it is business. The primary way a REIT generates income is through rent. The grocery store, the doctor's office, the tech company leasing floors, and the family living in an apartment. A REIT owns these buildings and collects monthly rent checks. After the REIT pays its own bills, property taxes, maintenance, insurance, management salaries, the profit left over is called funds from operations, or FFO. This is the money that can be passed on to you. The law requires REITs to do something very special with their profits. To maintain their special tax status, REITs must pay out at least 90% of their taxable income to shareholders in the form of dividends. This is a huge deal. Unlike a regular company that can choose to reinvest all its profits, a REIT is legally obligated to share the wealth with its investors. This is why REITs are famous for often paying higher dividends than many other stocks. This creates a potential stream of regular, passive income that can be sent directly to your brokerage account. There are also different flavors of REITs: equity REITs, mortgage REITs, M-REITs, hybrid REITs. Equity REITs own and operate physical buildings. M-REITs own the debt on buildings. They loan money to real estate owners. They invest in mortgage-backed securities. They make money from the interest they collect. They are more like a bank for real estate. Hybrid REITs do a bit of both. Equity REITs often specialize in property types. Do you believe more people will be shopping online? Industrial REIT that owns warehouses and distribution centers. Amazon. Do you think the population is aging and will require more healthcare? Healthcare REIT owning hospitals, nursing homes, medical office buildings. REITs for data centers, cell towers, residential apartments, self-storage facilities. This specialization allows you to invest in the economic trends you believe in most strongly. All right, let's talk Turkey. No investment is perfect, and anyone who tells you otherwise is trying to sell you something. You must go into every financial decision with your eyes wide open, understanding both the potential rewards and the real risks. So, you have listened, you have learned, and now you are ready to take action. Good. Knowledge is useless without action. The easiest way for most people to start investing in REITs is to buy shares of publicly traded REITs. You do this through a standard brokerage account, the same kind of account you would use to buy any other stock. If you do not have one, you need to open one today. It is your gateway to building wealth. Once your account is open and funded, you can search for individual REITs by their name or their stock ticker symbol, just like you would for any other public company. For example, let's look at a hypothetical situation. Say you invest $1,000 into a REIT that trades for $50 per share. That gets you 20 shares. Let's imagine this REIT pays an annual dividend of $2.50 per share. That means your 20 shares would generate $50 in cash dividends for you over the course of the year. $2.50 times 20 shares. That is a 5% dividend yield on your initial investment. That $50 can be paid out to you as cash, or you can use it to buy one more share of the REIT, a process called dividend reinvesting, which is a powerful way to accelerate your growth. You can do this.